This is the Think Podcast for entrepreneurs, business owners, and real estate professionals. Insight, real talk, systems that scale. Think about it. This podcast is brought to you by Unitas Funding. All your RTL, fix and flip, new construction, and bridge solutions. Unitas structures loans for real projects, not cookie-cutter files. Visit unitasfunding.com today.
Welcome to another edition of the Think Podcast. Today, I'm super stoked because I have a very good friend of mine, but also somebody that I truly respect in the space, who is a subject matter expert in the world of RTL, fix and flipping, ground-up construction. And so I've known John for many, many years, and he's somebody that actually is a true subject matter expert when it comes to this. So for those of you guys that are listening into the broadcast today or watching, I want you guys to know that the information that he's going to spell out for us today is the truth. It's what's current in the marketplace. And it's also one of those types of conversations that you're not going to have to read between the lines, because John is a very straight shooter. So without further ado, I'd like to welcome John Santilli to the show, who's the head over at Unitas and is building a team out there that is really taking the RTL, fix and flip and ground up construction space by storm. Very aggressively closing loans quickly with a simple and easy pattern to be able to submit these loans to. They're a key player in the Think marketplace, and I couldn't think of a better partner to have on. I've been trying to get John on the show for a while, but he's always so busy. So that's what it was. So John, tell the listeners a little bit about what you guys have going on over at Unitas right now, because it's a new move for you. He's been in the space as a figurehead a long time, and so I want to talk about kind of the new digs for you and the exciting stuff that you guys have going on.
Great. Well, first of all, thank you, Scott. Appreciate it.
Sure.
A pleasure to be here. And, we're excited. There's a lot of great things going on. I know you have a lot of great things going on as well. So we're here to support you in any way we possibly can. Thank you for having me on the show. There's a lot of great things going on right now with Unitas Funding. For the audience that doesn't know our structure, Unitas Funding is owned by the same ownership as Fidelis Investors. Fidelis Investors just finished up. We're in the process of announcing our next securitization. I think we are one of three this year that have done a rated securitization. So we're just finishing that up right now, and Unitas is, very excited that we've been able to participate in that. Unitas has been around, for the last 2 years, but really it's been kind of as the stepsister of Fidelis. Fidelis, who is really buying correspondent whole loans, providing warehouse lines, stuff like that. They were getting direct requests from brokers, from borrowers, and they were doing it more on an ad hoc basis than in a structured basis. So I was brought on board back in the beginning of June last year to really start pumping things up, build out the infrastructure, and get things rolling. So we have been on a fast path to develop that, and we are putting some decisive things in place to make sure that we can support not only the real estate investors out there that have demands that they need with speed, reliability, dependability with funding and draw processes and stuff like that, but with the discipline and the experience of Fidelis Investors, who has funded over 10,000 loans and funded over $5 billion at this point in time. We're excited. I mean, the market is a little tumultuous right now, I guess, with everything that's going on in Iran and otherwise. I mean, the fact is that we're taking a look at it, and the competition in the market's fierce. Okay, the capital has been plentiful for a really long time. Okay, but where's the capital going, and will this Iran stuff going on be, sustained pain that we have to deal with, and will markets start to tighten a little bit? I mean, that's what we're all looking at right now. I will say to you that the past 3 months, as we've been, growing our business substantially and putting the right people in place around the country to make sure that we can take loans from east to west and in every state. We're in 48 states right now, but we're trying to make sure that we have the support, the boots on the ground type of relationships to build this whole thing out. What we're seeing is a little craziness.
Yeah.
The fact is that I think that there's this race to the bottom, and we don't want to be a part of it.
No.
We're not going to be. You know what I mean? We provide, a broad group of product to really kind of, help those that are looking for bridge loans, help those that are looking for fix and flip, help those that are doing ground up construction. Whether you're a veteran with experience or with zero experience at all, we're providing those opportunities for those in the marketplace. But we are doing it with a lot of the institutional backing and discipline in order to make sure that we can support the investor audience now and in the future. To us, it's all about relationships.
Yeah, and so I want to go back to that real quick because, we've definitely chewed some of the same dirt and been down the same dusty roads over this, over the last 2 decades in the space. And so I do want to tell the listeners too. So for the Think Marketplace, Fidelis is our only tape buyer that we have right now. That's how much we trust in them. We don't need to go anywhere else for that partnership. So if you guys have tapes and stuff like that, or portfolio stacks and things that you want to sell off, and also John will be that guy as well, our conduit for that. But let's dig back into you. You're a fan, and you always have been, of people trying to cut their teeth, so to speak, right? And newer guys in the space. I know a lot of lenders out there, oh, no, we're not going to do that unless you've got 5 experience and stuff like that. But you've always been, I've known you a long time, right, where you say, well, somebody's got to help these people to get going. And one thing that you guys do, and you, no matter where you are, but the thing that I think is awesome is you always train people. It's part of your success on how to actually borrow the money effectively, and you're very big on education to be able to cultivate those people. So when you guys at Unitas started looking at the lower experience or zero experience borrower, when you look at that, give everybody kind of a peek to the inside of what your underwriting thoughts are or what your risk is, because a lot of people are going to hear this and say, they're helping out new guys like me. And that's going to be very attractive to a lot of people. And folks, I'm going to tell you, genuinely, they are. It's isn't some kind of bait and switch theory where you've got to come in and all this stuff. John will actually do it. He's a fan of the newer guy or gal that's doing this. So give everybody kind of your opinion on what makes that an attractive loan for you with a lower experience.
Well, you heard me already say relationship lending. Mm-hmm. Okay. And like I said, and that's whether you are a veteran or you are brand new. So first, you got to take a look at the capital stack first, okay? A lot of the competition out there has to abide by, what their capital stack dictates. And right. When you look at the relationship with Unitas and Fidelis, Fidelis is an asset manager. They're an asset manager. They have $1.1 billion of assets under management today, okay? So if things like the Iran crisis going on right now, okay, and the geopolitical stuff that's going on right now start to impact the markets, we don't have to worry about lines being pulled. What we have to make sure that Fidelis does is they provide the return on the investment to their investors, okay, their investor base. So their investor base kind of depends on the disciplines that they have first, and then they pass them on to us. Okay, for me, on the Unitas side of the fence, how do you get a start? How do you get started in this business? I mean, this business is one of the coolest businesses out there. Of course, I'm biased, all right? Right. But the reality is that, there's a very low barrier of entry to get started. I watch this TV show on over the weekend. I see how fix and flip works. I want to do it tomorrow because I have cash in my pocket and I have some, I have some ability to work with good contractors, stuff like that. So for us, it's about education, and it starts there. Okay, we want that fix and flip borrower to start small, grow big. Okay, and I really do mean start small. You know what I mean? The fact is that, if you have done renovations to your house and you said, let me go put a new bathroom, new kitchen into your house as a private homeowner, okay, that's painful sometimes. Okay, if you pick the right,
you better believe it.
If you don't pick the right contractor, it's painful. We do want people to start smaller because if you're starting out with the average amount of renovations that's going on today, which is usually between $50,000 and $80,000 on these smaller proproperties.
That's for a cosmetic. That's cosmetic flip.
That's correct. If you're starting out with that kind of stuff, then the fact is that that's a lot to manage. All right. We will walk you through the numbers. Okay, because there is math here that people just don't necessarily understand. They all say, I want to fix and flip. Okay, I'm going to buy that property that's been on sale, down the block for a little while. I'm going to fix it up and sell it. There's got to be margin there. Okay. And there's got to be buy margin, carry margin, sell margin, all kind of math that's got to go in there. What Fidelis and Unitas believe in is profitability. Okay. So we'll help calculate the profitability on the deals up front for the new investors. Okay. You don't have to go to these magic classes that charge you, $3,000, $10,000 and stuff like that. You can go to us and we'll help you through the math. We're going to take you through Zillow and stuff like that to look at what the realistic values are, because you might think that the property is going to sell for one number, but the reality is that this is what the market's dictating right now. We'll show you that, and we'll show you the math in order to make it work. The loyalty that you get from educating people, okay, and giving them a chance, I do like that customer. All right, because I want to help them, and it really gives us gives me a lot of satisfaction to see, people go in and come out successfully.
Well, and I think your whole basis of relationship lending, I like that, because they really mean it, folks, and they will really take the time. Because let's come down to it. Anytime you're educating somebody, you cannot teach people our business in a 10-minute phone call. It just doesn't work. But so you train your staff and the people that are working outbound with these new clients to take as many calls as it takes to make sense. You also get through the underwriting guidelines very quickly up front so that you're not wasting time or their time, right? Let me ask you a question, because when I had a couple of our affiliates that are inside the marketplace that are sending you loans currently right now, wanted to get your opinion. 2 people. When they heard you were going to be on today, sent me text messages to ask you specifically, because we went through COVID and we saw what happened with materials and all this kind of stuff. Now that with oil being where it is a barrel, I mean, it shot through the ceiling like a rocket ship. I don't know. I think it was 120 a barrel or something like that the other day. It's all speculation, but they wanted to know, because of your expertise in kind of construction, ground up and stuff like that, because you also, and we're going to talk about how not all markets are the same for that asset class, but do you think that there's going to be a supply chain and demand issue where materials are going to start to go through the ceiling because of the cost of gas and oil? I mean, I had that from two our affiliates wanted me to ask you that question specifically. Are we headed for another supply chain issue?
I was on a call last week with a bunch of industry peers. The answer is we don't know the true answer yet. It's all speculation at this point in time. I think if this winds up being a sustained presence overseas and stuff like that, I think that, the more people that get involved with it, and if this becomes a more global, I think that you will see tightening. We're still dealing with the supply of houses, okay, in general. We're still dealing with sustained high interest rates. And even though interest rates are slowly dropping, you know what I mean, we're still dealing with that supply issue on houses alone. Okay, so I think that, more of the critical factors that we need to take a look at versus what is going to happen with a sustained presence. And I think that's more of the immediate issue. I don't have the crystal ball on this one. All right. I would just say, I don't think any of us do. I think we're just going to have to sit and wait this one out a little bit. But I would say to you that I think there's more immediate domestic things that we're dealing with. And listen, if the rates continue to go down, you're going to see a lot of those properties loosen up. And the fact that we have over 50% of our properties have been built prior to the 80s. The fact is that there's a lot of properties to be rebuilt. So all we need is some of that deluge to open up a little bit. The recent article that we've been working on together, the fact is that I'm focused on new housing versus renovation.
Correct.
I mean, should we be really building houses right now? Okay. Or should we be renovating those houses? Well, there's a demand on affordability. There's a housing being in the MSAs that we need. Until we see some of this loosening up with the interest rates, I think we're still dealing with some of that crisis more than anything else.
Well, I think too, there was the big self-migration, right, with COVID. And you and I have talked about this, where everybody kind of came south into the Sun Belt, right? And because they could work from anywhere, and everybody started to go remote, and then like any time in the ocean, the tide comes up, and then the tide has to recede, right? Now people are getting called to go back to Cleveland, Madison, Philly, in a lot of people who have come down south, especially the growth in South Carolina has been biblical. I've never seen anything like that in my 27 years. You and I talk about that. I think that there's a lot of people that aren't going to, in certain markets, they're not going back to the snow belt, right? Once they get below the sun line, they're going to be like, yeah, I think we're going to stay. And so I think that increases the demand for lack of housing in certain markets. In your opinion, because I know you study these markets daily, right? You're a data hound like I am, and this is why he's one of our Think experts on the Think panel. You guys, is that I'm a data dork. John's just a data hound. He knows how to project and pull those numbers out. In your opinion, John, where are the sexy markets right now? Because it changes. It changes with the season, all that kind of stuff. But what markets are you seeing that you really like right now for continued stable growth? Because there are attractive markets, but it's going flat in certain states. Where are you liking the look out the window?
I'm going to give you a broad answer first, and the broad answer is the northeastern corridor is still a hot spot. The smile states, as you kind of said, the migration to the smile states, the fact is that there's some concerns in some of those areas. I mean, we are definitely more cautious in Florida, in parts of Texas and California and stuff like that than other places.
Yep.
For sure. This is not a big secret. But the reality is that I think some of the northeastern corridor type areas are still pretty hot. I mean, wherever there's a concentrated MSA, where you're not in rural areas and there's a concentrated MSA where there's big business around supporting that and big economy supporting that, those are the hot spots. In my backyard is Philadelphia, a hot spot. I think Philadelphia has some challenges, quite frankly. But there's still some hot markets on the outskirts of that for sure.
Yeah.
You know what I mean? Mm-hmm. I think that everybody still runs towards, the Boston markets and, and stuff like that as well. I think that you have to look at some of these states where it's not so friendly to, foreclose and, remove, bad apples in the rental space and stuff like that. So I think you have to look at all of those variables. But we are strategically placing people, our salespeople, in areas of hotbeds, to make sure that we can give that personal touch on things. We would rather do fewer loans with good relationships than just loans anywhere. We're in 48 states, right? You do advertising of, building your brand, and you start getting phone calls everywhere and anywhere. And the reality is that we will always consider all of those deals that are good deals. Where there's profitability, where there's opportunity. We would rather, again, go back to that relationship. I'd rather meet you face to face, talk to you about your project, talk to you about what your staffing is and how you're going to manage the construction piece and help you through it. And whether you are building your first property and renovating your first property, or whether you are building out 5 properties, 10 properties a year, 20 properties a year, whatever your mechanism is. We just had a conversation with somebody that they're doing 70 flips per year.
Wow.
70 flips per year. I mean, that's huge.
That's massive.
So the fact is that I want to meet that person. I want to meet that person face to face. I don't want to do, 70 flips with anybody unless I'm meeting with them face to face. You know what I mean? Understanding what their infrastructure and process is.
You go the extra mile on that to really solidify that relationship because, somebody that's doing that. I mean, I've done maybe 70 flips my whole life, right? They're doing it a year. I mean, that's a monster number.
And here's the thing too, is that with our capital stack the way it is, Scott, as you know this, is we can get more flexible with those individuals because we're not just underwriting to the securitization box.
Correct.
Because I have that asset management, stack behind me. If we see a certain niche, actually Fidelis will recognize that niche before even Unitas does, and they'll bring that product to market. So it really does help with the flexibility of that as well to bring smart deals to market.
You're dedicated to that too, because you don't. One thing that I will say that I've always respected about you is that, you'll give a fast yes, a fast no, and you will teach people how to work with you, but you don't waffle from that. So you never have the confusion from the people going, well, I thought he meant this. They never say that about you, right? And I think that that's a true testament to the way you educate your clients to be able to
criticize for the other part, which is the fast yes and the fast no.
Well, no, but I would rather have that, wouldn't you? I mean, think about it, man. So many times you guys will be, you'll see this, and folks listen to this. Every deal isn't always a yes. It's just not. So if you call a certain LO at a company or an account executive, they're like, oh yeah, we can do it, no problem. No, that's because they're just trying to get loans in, but it's not really of a service to you. So keep the mind on that. We got a couple questions left here before we wrap up at the end of this. One is, because I know you guys are actively hiring right now, and I want to put that out there. So, but you're hiring a certain level of a professional, right? You're looking for people that you can really start to build out territories with, and stuff like that, especially in the East Coast. And so, folks, for those of you that are really kind of solid, educated, experienced loan officers, stuff like that, or account executives, if you want to have a call and a discussion with John, he'd be more than happy to talk to you. Not everybody's obviously going to get in, but as he's growing those teams, it is a phenomenal place to work, and the culture over there is pretty kick-ass. I'll say it. Last, because you sit on our board, our panel of experts, and so if you guys ever want to be able to read more of his thoughts, he's a contributor to Think, and it's coming out in the magazine and everything else that we're doing. You can always get John's thoughts on this. But lastly, I want to go over your best tips from an educational standpoint of telling people, these borrowers, especially the newer guys, on what they need to do to get ready to work with you. Because, folks, you've got to be prepared. If you're going to go up and work with a company like Unitas, who is very well capitalized, they can think outside of the box, inside of the box. They're a fan of what you're doing. I know this because I've known John a long time, and he likes this business like I do. I think it's the best business there is in the world, and I think that the opportunities aren't going to go anywhere anytime soon. So it's going to continue to grow. How would you suggest people get ready to open that communication with you and your team?
Just know your facts. I mean, it really starts with that. I mean, if you want that, listen, nobody's changed in this business for as long as you and I have been in it, Scott. The fact is they want fast answers. They want reliability. They want, like when you say yes in the beginning, is it a yes to the end? You know what I mean? Or are you just bait and switching me with a term sheet that looks one way and is going to turn another way? Here is information to make an educated decision. We know that things are going to happen on the back end. Why do you think the value's there? Give me the background around the sponsor. I mean, again, no experience or very experienced, okay? Big project, small project. Help me understand the sponsor in the background. Like, we do loans for, those that have construction experience. They're a GC, but they have zero experience. We'll do the new construction deal for those folks, okay? And we'll do maybe even larger projects on the fix and flip, but give me the information that supports that. So give me the sponsor information, give me the liquidity information, not just the liquidity that I ask for to make the deal work, but give me the liquidity information behind that, because it just makes the whole deal stronger. Doesn't mean that I'm charging you any different than anybody else is going to be charging you. It just means that you're going to have more reliable of an answer, okay, up front. And, if you have a demand for speed, we can meet your speed multiple levels. I can meet your speed on draws. I can meet your speed on closings. It really is come with the information. So, when anybody comes to me and says, I got a 7-day close, can you make that happen? The first response that I have to them is, can you make it happen? Because I can. All right.
True. Right. Yeah.
The reality is that, did you order title yet? Okay, from a reliable title company. Okay, do you have an appraisal? Because we will utilize your appraisals. Okay, we'll utilize your appraisals, or we can utilize my in-house hybrid appraisal. So we'll do hybrid appraisals in-house. Hybrid appraisals where it is a BPO and a 1004 on a 1004 sheet signed off by a licensed appraiser. All right, we'll utilize a lot of different tools to get us there. We'll even utilize, those great tools that are in the market now, like Richer Values, stuff like that, in order to get things done fast. Do you have your ducks in a row is the first thing that I'll say to you. So sponsor information, liquidity, documentation. Are we ready to go? Our portal's nice and easy to jump in and out of, whether you're a broker or a borrower. We utilize some of the best, loan origination systems in the market. Very reliable. We've done our due diligence multiple times over, so we have great, easy tools for you to work with. And our processing staff is motivated to get that through the process fast for you too. Your account manager is going to help you drive it. Your account executive is going to help you drive it. So just have your ducks in a row and we'll be ready to go.
You said something early on too, and this is for the guys out there. When he's talking about experience, there's actual job and professional experience, and then there's financing experience, and that's something that they will. If you're a general contractor, but you've never been the guy to sign off on the loan, John is a fan of knowing that you know your stuff, and so let's get you a loan now so that you can do it. So you're not working for other people; you're doing this for yourself, and I love that. So we wrap up here. How do they get a hold of you, John? That somebody on your team can then call them back and get them started on those submitting loans with Unitas, because you go through the marketplace at Think, obviously, because you guys are lead partner on that. But if they want to contact you directly and they're not a Think affiliate, how does that work?
So unitasfunding.com is our website. Okay, we do have a loan calculator on there that's pretty awesome. It really matches most of our products. The fact is that you have real structuring tools on there that will mimic and mirror the deals that you're requesting and the deals that we're going to wind up approving. So you can go on there, you can submit your forms there, you can call us directly, obviously go through Scott, you can find me. I'm much like you, Scott. I don't sleep too often. The reality is that I do answer every email.
No, you do.
Yes,
I know. Even if it's 2 a.m, you guys, he does. He's always working. So
any way that we can help you and your network, Scott, we're in.
Yep, and I'm a big fan, and everything that you heard on here today is not some fluffy ad spin. I've worked with them. I know them. I'm telling you, it's the truth, and he walks the walk and talks the talk. So, Unitas Funding. You can get all your information there, or reach out to us here at Think. I will make sure that somebody from over there gets in contact with you directly, and look for some of John's writings. And also, John and I were in the same book. This came out for private lending out of AAPL. You can find that book on Amazon as well. John's chapter that he wrote on that was absolutely phenomenal. So for mentorship and all of that, I can't say enough good things about my friend here. So thank you very much for coming on the show today, John. I appreciate it, and I'm sure we'll hook up together here soon. Okay, brother. We'll talk soon.
Thanks, Scott.
Thanks. Bye.